discussing multiple time frame analysis today. So we have lots of time frames. If you just click here on your trading view, we have 12 months, we have 6 months. This is currently 6 month time frame. Each candlestick represents 6 months. We have 3 months. As you can see, each candle represents 3 months. We have 1 month. We have the weekly. We have the daily. We have the 4 hour. We have the 1 hour. We have 30 minutes, 15 minutes, 5 minutes, 1 minute. So the idea now is multiple time frame analysis helps you determine the overall directional bias of the market. Now, what do I mean by that? If you want to analyze, let's say you open a chart, you want to analyze the chart, you should be looking out for analyzing from the higher time frame to the lower time frame. So the time frames you should be looking out for, we have the weekly, we have the daily, we have the 4 hour time frame, we have the 1 hour time frame, or you can put the 30 minutes time frame. Then we have 15 minutes time frame, 5 minutes time frame, and the 1 minute time frame. Okay, so these are the time frames you need to really focus on. It's very important. You can take note of this. So we're going to start from the weekly, then we're going to work our way down to the lower time frame. So this is a GBPUSD on the weekly. So far so good. Okay, so far so good. First of all, let's look out for areas of liquidity, support and resistance. Okay, as you can see, this is an area of liquidity. Price has what? Taking out liquidity. Now let's look out for the trend. Is it a bearish trend, or is it a bullish trend, or is it ranging? Is it consolidating? So far so good. This is what? A bullish trend. Price making series of what? Higher highs and higher lows. Now let's move over to the 1 hour time frame, or the daily time frame rather. So now on the daily time frame, price has what? This is a break of structure. Good. So if you zoom in a little on the daily time frame, you would see that price is creating a resistance level. This was a bullish trend. So you can see making series of what? Higher highs, higher lows, higher highs, higher lows. Break of structure, break of structure, break of structure. Now at this point, price refused to break structure. Now what happens when price fails to break structure? It does what? We have what we call a change of character, change of trend. Now this is also what we refer to an inducement. A situation where price does what? Take out liquidity, create an internal liquidity, and what? Takes out internal liquidity. So now that we have spotted an inducement, we have spotted a change of character. What next? This is now going to be looking out for what? A sell. Looking out for a sell. So a short position from here, stop loss is just going to be above this high. Take profit. First take profit is going to be 1.31524. Second take profit is going to be 1.27132. So let's now move over to the 4 hour. Now on the 4 hour, you won't just jump into taking a sell trade. You will still zoom in so that you can see. Now this is an area price is about to do what? Take out liquidity. This is also another block too. A beautiful. So the idea now is, if you jump in for a sell, you may have something like this. Price could just what? Push up to this level. Push up to this level. Or price could break through, push up. This is the level of POI. So let's use this level for instance, fair value gap level. Then from there you have a push down. So in order to play it safe, you need to zoom, scale down again. 1 hour. Now on the 1 hour, if you look closely, this is what? Lower high, lower low, lower high, lower low, lower high, lower low. When you have a lower high and a lower low, that is what? A bearish trend. Beautiful. So now that we have a breakout of the trend, change of character, price is going to do what? It's going to be bullish for now. Now, whenever you are trading against the trend, you need to be very careful. You need to be super careful. You don't risk so much, because this is what a short-term bullish and a long-term bearish. So let's say we enter from here for the short-term bullish, right? Stop loss is just going to be beneath this level. Take profit is going to be here. The first take profit for GPP is going to be 1.36523. The second take profit could be just above this internal liquidity point, the POI level with the second take profit. So we have a temporary buy, and what, when price reaches this level, we're not going to be looking out for a permanent sell. So if you scale down again to, let's say, the 30 minutes, the story is still the same. You know, price has what, broken out of this bullish, minor bullish trend, taking out liquidity at this zone, 1.35256 and 1.35109 zone. Now the price has taken out liquidity, price is now heading out for what? If you look at this is still also what, an inducement, a minor inducement. So you can find all these things on all the time frames. You know, you have, as I said, once price reaches this level, the level is 1.36302. yeah, once price reaches this level, then what happened? You look for what? A rejection candle. This is already an inducement, so you may have something like a temporary bullish, then a permanent bearish. So you can simply just entry over here, 1.36295. Stop loss is just going to be above this high. So this is analysis. This is how multiple time frame analysis works. You need to start from the higher time frame, work your way down to the lower time frame. Higher time frame is for what? The bigger picture. The lower time frame is where you find the entries. So even if you are like bearish on the higher time frame, it's possible for you to be bullish on the lower time frame, and vice versa. Let's say you are bullish on the higher time frame, it's also possible to be bearish on the lower time frame. So you don't just jump into taking an entry when you have found the overall direction on the higher time frame. You need to go down to the lower time frame, look for an entry, look for the perfect entry, because price may take you out before the move happens. So in order to avoid that, you need to follow the market, follow the trend, okay? And if you are going against the trend, like in this situation, you need to be very careful. Just risk what you can afford to lose, and always use a stop loss. As you can see, I always use a stop loss. It's very important to always use a stop loss, because the market is nobody's property, you know. Market is nobody's property. So that is how it works. You can scale down again to 5 minutes, 1 minute, whatever the case may be. As you can see on the 5 minutes time frame, price about to do what? Take out liquidity. This level of inducement, let me show you. Look, we can have something like this, price to come down, take out this liquidity, tap this inducement level, then guess what? It goes up. Pew. So we have a temporary buy and a permanent sell. So that is the idea behind multiple time frame analysis. Thank you so much for watching. If you have any question you want to ask, I remain your host, UB Kata. Thank you. Enjoy your day.